Good afternoon and welcome everyone to today's US market updates and our fourth quarter earnings review presentations. Great to see many of you on our webcast. My name is Kelly May, Associate Portfolio Manager, and here with me today are Fortrend CEO Joe Forster, along with our portfolio managers Chris Wallerman, Stephen Lyle, and Andrew Corcoran. We welcome question and answers throughout the presentation. Please feel free to click on the question and answers tab at the bottom of your screen to ask a question. We will do our best to answer it in a timely manner and as best as we can. With that, I'll now turn the presentation over to Joe.
Thank you, Kelly. Well, good afternoon. We've had a great run in the market. The primary issue here is that a quarter ago, we wrote about there being three risks affecting the market, being COVID, the election, and a stimulus package, fiscal stimulus. And of course, those risks have fallen substantially and the market has risen substantially. Since we last published, of course, we don't publish on the first week of January. I do 11 editions a year. So the performance is from the beginning of December. The market's up 6.8%, and we rolled forward for about 2/3 of the companies to December 2022 earnings estimates. So EE22 is the earnings estimates for the year ending, fiscal year ending December. Not all companies have a December year end, so we're not going to have 500 roll forwards, but we did have a 15% increase in forecasted earnings using to the new estimates over 2021, bringing the price earnings ratio down. So the price is up and the earnings are up more than the price. So the price earnings ratio has gone down to below 20. The 10-year treasury yield has increased from 0.84% to 1.17%, reflecting increased expectations for economic activity, but not creating concerns about inflation. There's been some debate going on in Washington between Powell and Yellen about the impact of stimulus on inflation. I think that's just nonsense. It's not worth talking about at this stage. We still have technology bringing costs down around the world dramatically. I think the bigger risk has got to be deflation. Second quarter earnings were full of surprises. So I think it was when I think it was in the June edition where we wrote about rapid shifts in the economy, or the rate of the velocity of creative destruction. I think it was the budget office referred to it as rapid shifts, or the rapid change in things, and how the economy is shifting towards a COVID stay-at-home economy. In December, Trump's stimulus wore off, and he was going to try and get something through, but he didn't, and the economy slowed down a bit in December. But now the new Biden stimulus is being factored into the market as something that will create sustainable growth in 2022. So the change and I don't know that that's going to be as sustainable as the market thinks right now. So I think there is a risk that maybe the Biden stimulus and the $1,400 checks may not be as sustainable as the market thinks it is. I think the market might got a little bit ahead of itself on that, but it's not important for $1,400 is not important when you think about Google and Apple and the FANGs and all the other leadership in the economy. The relative value model returned more than 13% during the period. Viacom finally went on a run. Viacom up some 50%, and Goldman Sachs went on a big run. So we outperformed the market substantially during the period, and we sold Amgen at a high. We just picked the absolute high on that. We made 17% in 4 months. And we went in to ExxonMobil, yielding almost more than 7.5%, and it's still half the price it was a few years ago. So we bought ExxonMobil, and I think it's since we bought it maybe 5%. So it's some good trading in there, which we're quite pleased with. Major movers in the market, there've been, as I say, the big surprises in the market. On the upside, what we've seen is this what people are over mediating about there's the right word. The media's got like froth over this Robinhood analysis where GameStop and BlackBerry and maybe Viacom have been subject to some short covering, pushing those stocks up above where they should have been. BlackBerry is up on some of this short covering. Baidu is a recovery, and Baidu is one of the stocks that you own, and it's one of the BATs, the three Chinese companies that are similar to the FANGs, the Facebook, Amazon, Netflix, Google, and Apple, Amazon, Apple. So Baidu, Alibaba, and Tencent make up the BATs, and Baidu has had a great period. We've also had a great result out of some hospital stocks. So Tenet is a hospital company out of Dallas, Texas. They had a great result. Eli Lilly was one of the few pharmaceutical companies to have a big run up. And Bombardier, surprisingly, has come back. If you drive out towards Costco here in the Western District, you'll see that there's a freight yard there for Bombardier. But if you look at the names on the trams, I think you'll find a lot of the trams are made by Bombardier. So not only do they make airplanes, but they make trams as well. To the downside, at I want to focus on Royal Caribbean. I just think these companies that are in the hotel business or in the cruise ship business are still very vulnerable to running out of money before things open up. Now, of course, a lot of people in the U.S. have had the virus. A lot of people have recovered. People have worked here previously and have gone back to the States, have had it. They've been vaccinated, and they're starting to get through the curve where there is some herd immunity. But it's not by any means giving an open up for the hotel groups or the cruise lines where you might be taking somebody from the United States. Are certainly not coming to Australia. So the cruise business is still at very high risk. Also to the downside, kind of surprisingly, was Deutsche Bank, because they had a big increase in the profit forecasts for the following year, some 100% increase in profits for the next year. That wasn't enough for the market.